Research report shows that only 21% of the households across the North America prefer to invest into the stock market. The others still prefer to invest in the mutual funds and ETFs. What do you think? What does this number tell? It is absolutely true that stock market can give you the maximum amount of the return over the period of time. And that's why there are many number of people who really wants to invest into the stock market, but since they have a lack of knowledge, they are preferring to invest in the mutual funds and ETFs. But if you are one of these who really wants to invest into the stock market but you have lack of knowledge, this video is for you. I'm gonna make a series of 3 different videos where I'll be teaching you each and every small details that you need to learn before you start investing into the stock market. By the way, if you do not know, my name is Mayur. I work as an engineer and I live in Canada. And whatever you will learn in this video will have some kind of an engineering touch. I'm gonna show you 3 simple things in this video. The first, what is the actual meaning of a stock? The second, what are all those numbers that you see on the stock page? And the third, what is the stock chart trying to tell you that you see on the screen? That's it. After this video, I'm sure that whenever you open any stock app, you will be able to understand what's going on down there. So let's start it. We have been hearing that people invest into the stock market, they buy shares of a company. But let's understand what is the meaning of share in a very simple way. Imagine a big size pizza and consider that pizza as a company. When you make slices of it and when you sell it individually, and if let's say I am buying one slice of a pizza, that means I am buying one share of the company. It is very easy to understand. Now let's include money into the conversation. Imagine you own a juice stand and let's say that you are doing a very well business so that you want to expand your business and you want to have another 10 more juice stands, and for that you need $1,000. Now you are deciding to raise money from the people so that you are splitting your whole business into the 100 shares. You want to keep 60 shares with you and you want to sell 40% of your equity. That means you want to sell 40% of your company so that you can generate some source of money so that you can have another 10 juice stands. Now in order to raise $1,000 by selling 40 shares, you must sell each share at a $25 value. And let's say these all 40 shares are bought by your neighbors. That means your neighbors are your investors. And imagine after a year, your all 10 juice are bringing good chunk of revenue. That means the value of your overall company has increased. That means your investor who had bought 40% of the stake in your company at a rate of $25 per stock will have much more value based on the revenue that you have been generating in the last 1 year. Now let's see how does the stock screen look like. My favorite website is the stock analysis, but there are n numbers of websites online from where you can analyze a stock easily. So let's start it. You can Google stock analysis easily and from where you can land on this web page. Today we are going to see, as an example, we will be using NVIDIA stock just to understand all these numbers. And also guys, I have recently bought it, so it is my most favorite stock these days. But hey, it is not any recommendation. So let's see it. As you can see on the screen, the actual name of the company is NVIDIA Corporation. And here, whatever you see in the bracket, in the stock market language, we call it as a ticker. But in our language, we can consider it as a pet name. What I do here is that whenever I go on a stock and that is unknown to me, I scroll down a little bit and here it tells that NVIDIA is a company which provides graphic and compute and networking solutions almost all across the world. Basically, it belongs to the technological sectors, and if you see the industries, mainly this company makes the semiconductors. This company is almost more than how many? 26 years old. And since it is a part of the Nasdaq, and that means it is into the US stock market. Okay, now let's check the price. If you see here, since the market is down, the price is not moving here anywhere. But if it is a regular trading day from Monday to Friday, the price will be continually fluctuating. And that shows that the stock is being currently bought and sold by many investors. So here you can see on the screen, the current stock price is $177.19, and whatever number you see here, that's the fluctuation of the stock on that particular day. So on the 27th of February, the stock price was actually down by $7, and in the percentages, it was down by 4.16% so far. The stock price you see here is basically the last traded price of the stock. That means somebody sold it at $177 and somebody bought at the same price. It's nothing magical. Now let's see the second number, the days range. This plays a very important part too. Here you can see that it really fluctuated from one to different prices. If you can see the chart on your right, and if you open the 1-day chart, it shows that the stock was open at around 180 something, and at the end of the day, its price fluctuated from maximum of, let's say here the number is 182, and it closed at 177.15. Here you need to see the one thing. If the stock price fluctuated throughout the whole day with a large number, let's say if that these changes was around 10 to 15 percentages, you can consider that day as a volatile day. And if the number is in the range of 1 to 5 percentages, still I would consider it as a calm day. The third thing, 52-week range. When we open the chart and select the 1 year, it will tell us the stock price movement in the last 1 year. And in the whole year, the stock's minimum price was around $86.62, and the maximum it reached to $212. And you can see that through the whole year, it has given the average return of almost 35 percentages. So let's say exactly a year ago, if you would have invested $100, today you would have $135 in your portfolio. Now you see here, if the stock price in the 1 year chart is trading at the 52-week higher, that means it is trading at its very strong support level. But imagine the stock price today is around in the range of its lowest, like 52-week low. There might be two reasons. Either there might be some fundamental wrong with the company, or secondly, the stock might be on the sale. But right now, we don't judge anything. We just observe it. Now let's talk about the volume of the stock. If you see on the screen here, the says it is more than 310 millions. The volume shows that how many stocks were traded on 27th of February. And here you can see that there were more than 310 million shares, either they were bought or they were sold. Imagine this as a crowd activity. If there is a big volume, that means a lot of people sold it or bought it. And if there is a lesser volume, that means there were only few participants. But what if there is a big move in the stock price, at the same time there is a large amount of volume? This shows that there is some conviction. But if there is a big movement into the stock prices, but there were only few participants, and when a company which is having a valuation in the range of 1 trillion, it is considered as a part of large cap company. The whole stock market is basically divided into the three categories: small cap companies, large cap companies, and the mid cap companies. The equation of market capitalization is very simple. Actually, it is a multiplication of two numbers. The first number is the stock price, that is $177.19. And the second number is the total number of shares of that company into the stock market. Now remember the same example of the juice centers that you have split it into the 100 shares. Same over here, Nvidia would have X numbers of shares into the stock market, and numbers of shares multiplied by with the stock price, whatever number comes is actually your market cap value. If the company is in the category of the large cap, the growth will be very stable. But if it is a small cap company, it might be the riskier, but at the same time, there might be huge potential of the growth. Now let's understand the most important number that plays a very crucial role while buying a stock, and that is PE ratio. The PE ratio stands for price of the share divided by earning per share. Many people say that price of the share divided by earning. No, that's a wrong equation. The actual equation is that price of the share divided by earning per share. We already know the price of the share for Nvidia is $177.19, but earning per share is totally different number that we will cover in the next video. But PE ratio plays an important role while buying a stock. This number generally tells that how much investors are willing to pay for $1 of a profit. Let's say if the PE ratio is low, let's say if it is less than 20, that means that there are two possibilities. Either the stock is very cheap, because if PE ratio is low, price of the stock is low, or there is some problem with the company because earning per share that goes into the denominator is little bit higher. But let's say if the PE ratio is higher, let's say it is in the range of 50 or 60, then again there are two possibilities. First, either the stock price is very much higher, that means it is not on a sale, it is trading than its actual value, or company is doing a very fantastic job. That means for any PE ratio, there are more than one possibilities, and that's why only this number cannot tell you the whole story. We got to deep dive more into it, and we will do it in the next videos. Try to see how does the chart of this stock look like. If you click over here, it will give you the bigger view of the chart. Basically, you are seeing the history of the stock price for that 1 year. The other chart is also called the candle chart. You might have seen this somewhere. And if we try to understand this, let's zoom in a little bit. There are two main kind of candles. One is a green candle, the other is a red candle. If we try to understand the green candle, that means the stock was open on 6th of February at $176.73. It closed here at $185.40. The lowest price of the stock was $170.486, and the highest price on 6th of February was $186.16. Very easy to understand. Now let's try to review the chart line. Here you can see on the bottom it shows the different stock prices on the different time interval. For example, if you see for the 1 day, this is the 1 day fluctuations for the whole, and this is basically the last day of the trading. Similarly, you can watch for the 2 days, 5 days, and up to since the stock was launched. Shorter time duration gives you the shorter story. The bigger time duration tells you the bigger history of the stock. That means that can help you to analyze the trend of the stock. Now, if you zoom out and let's say if you see the chart for the 5 years, and if you see the stock price is continuously rising year by year, it tells you that this is a stable company and it has a good potential. But at the same time, if you see the volatility for a 1 day, if you see a lot of ups and downs, that's a totally different story. You always want to zoom out and see the largest picture before you make any particular decision. Now let's try to analyze the trend into the chart. Like what does the chart means? Why people look at the chart? So there are mainly 3 trends in this chart as you can see. If you can see over here from 21st of April 2025, it continuously rose up to the 18th of August 2025. This is we call as an uptrend. If you zoom down over here, from 3rd of November, it continuously fall down until the 17th of December. This is called the downtrend. And if you see over here, from 17th of December to 5th of February, it was just in a sideway. It was moving up, it is going down, moving up, going down. That's it. You don't need any 20 indicators on your chart. You just need to have your eyes. And if you analyze the trend, you can analyze the future too. So let's just quickly analyze what we have learned today. We have started by entering the stock name. That is what we want to analyze. Here, NVIDIA, we call it as a ticker name, the PAT name. On the bottom, it tells you what does the company do, what sector it belongs to, what the industry belongs to. Then we saw the day range. Then we saw the 52 weeks price range, market capitalization, price per earning ratio, and eventually the chart. Now you know how to read a stock. But wait, I have a question. If you can read a stock, that does not mean that you can buy a stock, because there are n numbers of factors that you need to consider before buying any stocks. But you don't worry, because in the next video, I'm gonna show you how you can judge whether a stock is really good or completely trash. And you trust me, many people ignore this step totally. So that's it in this video. If you really think that I have helped you to enhance your financial knowledge at least by a bit, I would really appreciate if you can subscribe to this channel. Because since we are in the beginning phase of the channel, subscribing to it will help us a lot. Thank you so much.